Hi, I'm here today with Don Ernst, a Farmers Insurance agent in Leawood, Kansas. Hi, Don.
Hello, Michelle.
I have some questions for you about business insurance, okay?
Okay.
As a business owner, what kind of insurance would you recommend they get?
Well, most businesses buy coverage very similar to a homeowner policy. If the business owns the building, they're going to have to insure the building.
Okay.
Generally, they'll have some equipment or personal property, office furniture, whatever, so contents that they would need to insure. A lot of times they will need a business interruption or loss of earnings. Say if it's a restaurant and they have a fire, they can't just open up next door next week. They have to rebuild, and so it could take a while, and so there'd be business interruption coverage. And they want to have liability coverage in case somebody is injured during their course of operations.
Okay. And then we also, what if the business has vehicles? There would be a commercial policy for the vehicles?
Right.
Like delivery and repair vehicles, that kind?
Right.
And then what about key man insurance? What is that?
Okay, well, key man is more on the life insurance side of things. You may have a business that has a really good salesman, and he is bringing in all the business. He has all of the connections, and if something happened to him, it's going to take a long time to replace him, a really long time to get somebody new trained and to rebuild those relationships. And so it's going to cost the business some money if something happened to that person. And so you take a life insurance policy out on that key employee so that if something happened to them, you have the funds to go out and hire the new replacement.
Okay, and then for our business clients, we recommend that when we set up the business, we talk about what will happen if one of the members of the business dies or wants to exit the business, and so sometimes there's an insurance option built into that. Would that be something that your agency would sell?
Yeah, that's more in you would put the buy-sell agreement together,
Right.
And I would fund it.
Okay.
Okay, so you've got the agreement where if something happened to one partner, his widow is going to want to be is now the owner, and you want to buy her out. And so that's what the whole buy-sell agreement is, that the remaining partner agrees to buy that half of the business from the widow.
Right.
And so you have to have the money to fund that. And so we do the policies on each of the partners, and the other on each other, basically, is what they do.
And so that frees up the cash otherwise available to the family, so they don't have to use other types of life insurance or other assets to take care of that interest. And also sometimes they're in a professional corporation or entity, other people can't be part of the business, so that if the spouse inherits part of the business, sometimes
Right.
they're not legally allowed to be involved in that business. So this kind of keeps it clean.
Yeah, and in a corporation where there's more than two, then it becomes a cross-purchase agreement, and so you have different webs of who's insuring
Right.
who, and it gets kind of intricate sometimes.
But it's a better pot. That way it takes care of it, and the company pays the premiums.
Right.
Typically. Okay, so what information would the agent need in order to secure the coverage and identify the coverage for a particular business?
For a business, well, you want to know what type of business it's going to be. Is it a restaurant? Is it a tire store? Is it a clothing store? So the rates are different on that. What type of building are they going to occupy? Is it a wood frame building? Is it masonry, or is it masonry non-combustible?
How do they know that?
That's in the ISO, which is a commercial building rating service.
Okay. And any other information besides what the business does? Then do you need to know the contents like you would for a house?
Yeah, you want to know that, and then the premium's based on, for different types of businesses. For instance, on a restaurant, the premium's based on the public area square footage, where
Okay.
on a commercial operation it might be based on their gross receipts.
Okay. All right. So they need to know
So we
what
need
kind
to
of
know
business
that.
it is.
Mhm.
And then is this something that the company should wait until they have everything tricked out, they have all of the equipment and everything in place, and then call their insurance agent?
Well, generally, when somebody's starting up a business, they're doing their due diligence, and they're going to find out what is it going to cost to buy or rent a building, what's it going to cost to buy the equipment, and they're going to want to know what the cost of the insurance is. But you want the insurance in place the day you open the doors, because you have a liability exposure immediately, you have a risk to your property immediately. And then some people, however, they elect to go without coverage for the first 6 months, 7 months, whatever, till they see if the business is going to run or they get enough money up. But then that becomes an underwriting issue, because the underwriters are going to look at a business differently that purchased insurance right away, as opposed to a company that's been running without it.
So that would affect the rates.
Yes, it would. Yeah.
Okay. Could it affect coverage?
Could affect even their eligibility to buy insurance.
Ooh,
Yeah.
so that should be on the list.
Right.
Okay. Do you have any suggestions for anyone seeking business insurance on how to be organized, or any tips for them?
Again, it's just going to be when you go to get a rate on your insurance, you have to have done your behind the scenes work with your attorney, estimated the gross receipts, estimating what your equipment costs are going to be, and building costs, those types of things.
Okay, great. Well, this is really helpful. Thank you.
Thank you, Michelle.